Hello, everyone, and welcome back to the weekly MMA Cycles Market Update. This is Gianni DePoci, your host. I'm joined this week by a very special guest, financial astrologer William Stickevers. William, how are you doing today?
Great. Thanks for having me on your show. I really appreciate the opportunity.
I'm really glad that you're here, and we're excited to have you. So let's dive right in. What's on your radar right now in terms of geocosmic signatures and markets?
Well, I think the big thing is we're still feeling the effects of the Jupiter-Pluto alignment, and that's been really, we could see certainly what's transpired in the first and second quarter of this year. Look what happened with the banks. Look what the incessant, protracted issue with inflation, right? It's still systemic. It is still not going away. And I think that what we're seeing here is liquidity issues. We're seeing borderline liquidity issues. Obviously, there's a liquidity issue in regards to the regional and smaller banks. This is very classic with Jupiter Pluto when they keep raising interest rates. And we have to remember that Jupiter, anytime, whether it's Jupiter Pluto, Jupiter Uranus, right? Jupiter Saturn, it is inflationary. And what have we had? Jupiter Saturn conjunction. Actually, I would argue it's a Jupiter Saturn Pluto triple conjunction in 2020. Then we had the Jupiter Pluto conjunction, and now we're transitioning and we're in effective orb of the Jupiter Uranus conjunction. All spell out protracted, systemic, persistent inflation.
Well, I'm glad you started us off with that. I'm going to go ahead and share my screen here and run through a couple of quick charts just to recap some of the market price action. Looking at the Dow Jones here, it was a pretty volatile day. We had a GDP reading earlier this week come in above expectations. You're talking about inflation here. We did have a lower than expected core PCE reading on Friday, but William, I do tend to agree with you. First and foremost, it's important to remember that these inflation numbers are laggard in nature. When we look at what's happening, interest rates are still trickling higher. Big moves from the Bank of Japan finally saying they're going to let the yield curve control kind of phase its way out. And even crude oil staging a nice little bit of a rebound here. Take a look at USO real quick, going out near the highs of the week. So I think we need to be aware, as you said, of these inflationary pressures that remain persistent in this market right now. So what else is on your horizon over the next 6 to 12 months?
Well, I think the big issue or the big driving factor is we're certainly at the dawn of a technological Cambrian explosion with the emerging Jupiter-Uranus alignment that will be exact around the time of the Bitcoin halving cycle in April of 2024. So if you use a 15-degree orb, is what I use for both my geopolitical and macro forecasting, we are already now in the waning phase of the Jupiter-Pluto, which will still be persistent and influential in terms of what it's doing with the markets, particularly with the interest rates and how the lagging factor of the interest rates is going to express itself in terms of the impact it will have on the market, meaning that there's a lagging factor. Factor because, right, from what I see, we're still in that peak everything bubble, right, with that Saturn-Uranus alignment, right? We see as that bubble got bigger and bigger and bigger until the beginning of 2022, we saw increased market instability, and that got transferred over into the regional and local and regional banks, which are still distressed. We're seeing interest rates increasing. Inflation has been, if you look at John Williams, he's an economist. He estimates the real rate of inflation is somewhere between 13 and 14%. So the real rate of inflation is really the crux of the problem that is being hidden from investors. Right now, some investors like you and I realize that, but most investors think they're getting these like 20% returns on the NASDAQ when the reality is far different from that. So it's not just outperforming the markets, it's outperforming the inflation hurdle. And with Jupiter, Uranus is extremely inflationary, very inflationary. Yes, it's very bullish. That tends to be a a sense among the sentiment amongst investors, extremely bullishness, right? Where there's greater level of risk, greater level of instability, right? Investors becoming complacent due to this sense of entitlement of a long bull market cycle, all right? Being oblivious to the inherent risk and believing they can outsmart the market is the biggest peril that is coming between now and January of this year.
So let me make sure I'm understanding you correctly. Do you think interest rates are going to continue rising into that Jupiter-Uranus conjunction in April?
Yeah, I think this was the last one, but we could have one more, right? Because the Powell he's been consistent. He's stuck to his guidance about rate hikes, right? And he's basically maintained the Federal Reserve will not change policy until inflation is firmly below 2%.
Right.
Now we know that could break the markets. And that's exactly what the Jupiter-Uranus, where we see the markets going higher and higher, but more instability. So the laggard effect is being overlooked by investors. We saw this happen with Jupiter-Pluto. Jupiter-Pluto is going to come into, we'll still be in a range of orb in the third and fourth, especially in the third quarter of this year. So I expect if this is not the last rate hike, and we will have one more within 4 months of that. So the laggard effect is the most crucial economic factor that many Wall Street and financial media seem to be overlooking. And there is, we're seeing several macroeconomic indicators suggesting potential trouble ahead. So we're going to see the Jupiter-Pluto would certainly be indicative of those potential problematic gray swan indicators. And this disregard could likely lead to unforeseen financial losses. So we're going to see a hot market as things become fundamentally more unstable, and we're going to see over tightening. So my current expectation is for one more 25 basis point rate hike max this year, with no reductions in 2023, and rate cuts will probably likely occur sometime in 2024. But I do see inflation, the real rate of inflation, still staying persistently high no matter what they do.
Well, you said a couple things that I really like so far. You mentioned the liquidity factor, and that's a big thing when interest rates are going up. We tend to forget that volatility goes both ways. So, you're going to get these whipsaw moves to the upside and to the downside. I mean, you even see what happened this past Thursday. We had a bearish engulfing candlestick outside day bar, but then today on Friday we're right back up, and that's the type of price action you see in low liquidity environments that are the result of a rising interest rate environment. So I think that's very important to keep in mind. And you raise an excellent point as well when it comes to understanding the difference between nominal gains and real gains. If you have a 15% gain, but inflation is 8%, your real gain is only 7%. So I really appreciate you sharing that with our audience. Aside from the Jupiter-Pluto, and obviously we're in this Venus retrograde period right now, are there any other geocosmic signatures that you're watching, perhaps even from a geopolitical standpoint, and how that might impact markets over the next several months?
Well, I think a lot of financial analysts, because they don't have a technology background like I do, are really underplaying or marginalizing the impact of what I call the technological Cambrian explosion, which is essentially we're going to see an era of decentralization and technological advancement accelerate and intensify over the next 24 months, which will advance at a greater rate over those 24 months than we've seen in a 20-year period. Meaning, because of the law of exponential returns, we're going to see exponential growth and development and integration of these type of decentralization. So I'm seeing a transition, the era of virtualization, right? Rapid advancements in mobile technology, where everybody's connected everywhere, the emergence of these devices, right, through the Internet of Things. As we transition, as that's continuing to accelerate, we have this larger transition of decentralization. So we can expect a new set of new technologies to emerge and transforming our lives and industries in a much bigger, more impactful way within the next 24 months. So blockchain, distributed ledger technology, artificial intelligence, we're transitioning from weak AI to strong AI, which will borderline on artificial general intelligence, quantum computing. Biotechnology and genomics is going to go mainstream starting next year, which will enable personalized medicine, gene editing, potential eradication of certain genetic diseases, major breakthroughs that way. Virtual reality and augmented reality are going to go mainstream. And then, of course, we have the renewable technology, but the more important thing is energy storage breakthrough.
Yeah.
But the big problem with this is that they can generate the electricity, but it cannot be stored in a way that's scalable and sustainable for the type of ESG requirements that are being pushed down onto governments. So I'm seeing that as a big upside opportunity. A lot of people overlooking. I don't think the action is where the S&P 500 is going to be this time 3 years from now, but where these exponential technologies, the more disruptive they are, the more upside there will be. So what I'm seeing here is the greater level of volatility we see with these ETFs, these different types of ETFs, and with the crypto, the more upside. This is very different than someone that looks at volatility as a problematic issue that indicates downside price movement, right? So we have to think inversely, especially now that we're at the verge of experiencing the most rapid period of technological advancement in human history. What we will achieve between 2023 and 2032 with the Saturn-Uranus alignment will be equivalent of 40 years of technological advancement inside of 10 years.
Well, there certainly are no shortage. There's no shortage of geocosmic catalysts for that, between Pluto ingressing definitively into Aquarius and Uranus going into Gemini during this period. I also, when you were sharing the new medical technologies emerging, that made me think of the Saturn Neptune conjunction that's going to unfold in Aries too. So yeah, definitely an exciting time for that. So one other thing I want to ask you about, William,
the Saturn Neptune Aries on the world point.
Yeah.
Now that makes it much more significant. This is not an ordinary Saturn Neptune conjunction. So now Saturn Neptune on the world point would indicate deflationary forces. So we go from inflation to deflation.
Brilliant.
Right. And we see the fiat currency system, or the fiat currencies, many fiat currencies start going to zero in terms of real purchasing power. And that could include the dollar based on other larger macro and geopolitical forces that are operative. And of course, the war in Ukraine, right? I see that accelerating and intensifying. It's not going very well for the Ukrainians. And I see the Russians able to secure their position in eastern Ukraine, and NATO will be forced to broker a deal. We'll see how that turns out. That will be a factor because why? The largest exporter, all right, of grain, wheat, and most importantly, fertilizer for the Middle East, for Central Asia, for many, many different parts of the third world, come primarily out of Ukraine and Russia, and they are not exporting. So we have another potential Arab Spring scenario emerging, right, with the Jupiter-Uranus alignment. Why? Go back to 2010, 2011. 17 countries went into revolution over the price of food, if you remember, right?
Yeah.
Well, that's about to happen again. So that's going to be another factor we have to look at in terms of this instability of the larger macro markets, regardless what the Fed is doing with interest rates.
Yeah. Well, you mentioned, and I wanted to ask you about it as well. So where do you think crypto and Bitcoin and other blockchain technology fits into this whole situation?
Well, I think Bitcoin is going to eat everything. I think Bitcoin is going to reach parity with gold in total market capitalization by the time of the halving event. And if you look at the halving event, depending on if the price of Bitcoin is somewhere around 45,000, we're looking at a 386,000 within 1 year after the halving event of April of 2025. So once once Bitcoin reaches parity with silver in terms of total market capitalization, it will then go after gold. It will start eating away at gold, where gold's market capitalization is about 11 trillion. So after that, then it goes after the stock market, the bond market, then the real estate market. So Bitcoin's becoming the world reserve currency and the safe haven. Gold is no longer the world reserve currency. The smart money is not moving their money into gold. They're moving it into Bitcoin. And when BlackRock ETF gets approval, possibly in September, right, there's no going back.
Wow. Ladies and gentlemen, William Stickevers. William, where can we find your work? This was excellent.
Oh, thank you very much. You can find me at williamstickevers.com. I have a Regulus forecasting group that specializes in giving presentations and doing asset allocation portfolio recommendations specific to clients. Williamstickevers.com is at my website. And I have a geopolitical forecasting group called Global Transformation Astrology. We cover the whole gamut, not just economics. And a crypto group. I have a crypto astrology group where we go into twice a month into doing actual crypto forecasting and trading purposes.
Excellent. Thank you so much, William, for joining us today. You can find all of our work at www.mmacycles.com, our trading academy, our market reports where we cover stocks, bonds, currencies, interest rates, and commodities. And that's all for now. So thank you, everyone, for watching. We'll be back same time, same place next Friday. Have a great weekend.